𝗲𝗡𝗪 appears to be starting to make an interesting move to the upside. Guys, in this video, we're going to dive down into the technical analysis on 𝗲𝗪, see exactly what has been going on with 𝗲𝗪's price action and what we might expect to happen next. As we get into this video, if you do find it useful and informative, hit the like button. Really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, with all that said, done, and out of the way, let's dive down into the charts and take a look at what has been going on with 𝗲𝗪. Okay guys, so we're going to just start off with the weekly chart. I'm just going to give the overview of what's been going on with this bull run so far and where we are seeing things likely to go by the end of the cycle. Now, obviously, if you're new to the channel, you might want to stick around for this. If you're very familiar, we obviously cover this pretty much with every 𝗲𝗪 video, so feel free to just skip ahead. But we're going to really just talk about the impulsive waves, right, to start with. So basically, the bull run for 𝗲𝗪 has been constructed of 5 impulsive waves. This is the Elliott theory, okay? And basically, this is confirmed with wave 3 and wave 4, right? These are the two key areas within the wave, because this allows us to kind of see whether or not we were just corrective action pushed to the upside or whether it was impulsive. And the good news is that we basically found the bottom of wave 4 and we were impulsive, as in we're looking to push massively to the upside. So all of that is looking pretty good. So basically, this kind of started back in March of 2020, pretty much when the stock market crashed, the pandemic, etc. We saw the pullback, and this was a nice low area, and we started to see a nice rise to the upside. Now, wave 1 completed up in August. I think many people around at a particular time would be very aware, those all-time highs that were being set from things like VeChain, etc. And 𝗲𝗪 was moving nicely to the upside. Then obviously pulled back, and again, this was back in the latter part of 2020, right? We basically just traded sideways. You can kind of see the level of sideways trade that actually was occurring here within wave 2, right? It was pretty much from September through to the end of December, okay? And then we went really nicely up into the upside with wave 3. So wave 3 actually peaked up in March of 2021, right? So basically a 385-day run from March through to March. Okay, and that equated to 18,905% in gains. Now, that is significantly higher than Bitcoin, Ethereum, and a few others in the space as well, right? It's a very good performer for the portfolio. Obviously, the safer bets are Bitcoin and Ethereum, and that's what's often communicated out there. Obviously, with Bitcoin only reaching 1,600% for the same time period, although it's considered less risky, it's also has less rewards associated with it. The same for Ethereum, only 5,100 during the same time period. Again, lower risk because it's been around in the space for a while, but still not the best performance for your portfolio is going to be had out of those projects, okay? So it's about managing risk versus reward, okay? That's pretty much what we're trying to do navigating the space. That's why research is so vitally important. Now, we did a lot of research with 𝗲𝗪. It took Chris quite some time to convince me that it was the right project for the portfolio. And obviously, doing that research and diving down into it in a lot of detail, and obviously getting in touch with the team, answering the questions, all that kind of stuff, it has obviously been, very well received. It's been pushed up massively to the upside. And again, our portfolios are very much grateful for that research. So there isn't really much as a substitute that, you want to be doing. Obviously, when it comes to the bear market, that research is going to be absolutely key, specifically to identify projects similar to 𝗲𝗪 in those really early stages, right? You're able to buy it at less than a cent and ride this massively to the upside. Okay, so obviously the fourth wave correction, loads of people in the space, and if you've been around since March, for example, you'll be familiar with all the different influencers calling it a bear market and how we're going down to 20k Bitcoin, if you remember. It's important that we acknowledge who was saying what, okay? Because obviously on this channel, we've been very, vocal on saying that we're not in a bear market, it's a bull run, and these are the reasons why there's a bull run, right? And we're not subscribing to 20k Bitcoin. We're not subscribing to bear runs and stuff like that this early in the cycle. It just doesn't make sense, right? So this is something that we've always called as a fourth wave correction, okay? And we're pretty much calling this impulsive move once we kind of got to the top of wave 3. And that is just because it was too soon to see this correction to the downside. People that were calling, 20k Bitcoin, for example, it was too soon for that. It didn't line up with anything that we'd seen in any of the technical data. So instead, we were just basically trying to scope out the fourth wave and find the bottom for it. And the main thing that you're looking for when it comes to these impulsive moves is to make sure wave 4 does not cross wave 1, one of the most important rules when it comes to these impulsive moves to the upside. So it's great to see that actually played out nicely as per our expectations, and obviously we started to rise back up. Now during this time of wave 4, this is the opportunity to get in before that fifth wave really kicks in. Again, this is also the same time and period when people were getting incredibly frustrated with Harmony 1, calling it all sorts of different names under the sun because they were frustrated with the fact that they may have bought higher up in wave 3 and they've seen their investment just pull back. Obviously, I think now many people are familiar with what's been going on recently. Harmony 1's been pushing back to the upside, and obviously we've gone higher. We set new all-time highs higher than the previous wave 3. So you would only have lost money during this fourth wave correction if you succumb to the fear and the nonsense that people were talking about in terms of bear markets. Okay, but if you're paying attention to the channel during this fourth wave correction, then obviously this was the opportunity to accumulate, not sell. And again, if you had held onto your bag, you would be in profit right now. Okay, now obviously that's great, that's what's happened, but where are we going, right? And this weekly chart gives us a bit of a cheat sheet to exactly that. Okay, so it's important that we understand that this entire bull run is made of trends. Okay, and when you follow this impulsive move, we can see that there's wave 1, wave 3, and wave 5. Those are all upward directional trends. Okay, so those are trends that are moving up, and there are two trends that go down, wave 2 and wave 4. Okay, now this is obviously incredibly basic, very fundamentally easy to see, specifically if you actually draw the lines on those trends, right? On the weekly chart here, you can see there are definitively good trends going on, right? We can see them. You're moving up or you're moving down, right? It's very clear to see on the weekly chart. But we can use this to our advantage, okay? So it's important that we acknowledge that these are the trends of the bull run so far. And when we actually take into consideration the downward trend for wave 2, the upward trend for wave 3, and the downward trend of wave 4, those three trends, it allows us to predict out where we think wave 5 is likely to go. Okay, it's just following mathematical equations on the trends that we've seen so far and predicting the probability, or the highest probability, of where we're going to end up with wave 5. Okay, so for that, we use a trend-based fib. This is not just your regular Fibonacci retracement tool. This is a trend-based fib, okay? So basically, we take the low area of wave 2, we take the high area of wave 3, and we take the low area of wave 4. We take those three anchor points, okay? Take those into consideration, and we can see Harmony 1 moving out to 96.5 cent. So from the current position of 31 cent, that's not too bad. We're talking about a 3x left on Harmony 1, right, from the current position. So again, it's about managing those expectations at this particular point, right? We're not going to go crazy, in my opinion, here with Harmony 1, right? We are talking about Harmony 1 getting a 3x at this point, okay? The gains have already kind of happened, if you're getting in down at wave 1 or wave 2, right? Those are the areas where you're going to be accumulating, or ideally in the bear market. So do join us for the bear market, guys, because we're going to go through a lot of this detail of how to do the research, how to accumulate massive positions before the bull run starts, which is obviously how you make your money. Your money is made in the bear market, not the bull run. The bull run is just about managing your expectations, managing your emotions, okay? Because greed can get the better of you. Okay, so if you're new to Harmony 1, manage those expectations. It's going to be absolutely vital that you do, otherwise you may end up carrying a bag of Harmony 1 into the bear market, or even worse than that, actually selling on the way down, which we don't want to see. Okay, so for all of our subscribers, we want to see you sell on the way up. Okay, lock those profits in. Make sure that you don't carry a bag into the bear market if you were not intending to do so. It's great if you are. Okay, we run a validator pool for Harmony 1. It'd be fantastic to have you delegate, all through the bear market, earn a nice passive income on your holdings. Okay, if that's what you want to do. It's a nice, easy way to hold and earn during a bear market. If you want to maximize your exposure to Harmony 1, then obviously buying and selling during the bear market is going to be the fantastic way to build a very good position and then get it delegated and earn even more, right? So it's important, that you manage your expectations, you have a good strategy, and you make sure that you're not hanging around in the bear market if you don't want to, right? The bear market, though, is where the money is made. So if you're really in this and you really want to make sure that you're earning that good level of income, then you want to make sure that you're around in that bear market to build the positions required for the next bull run. Okay, so I'm not going to go on about that, but the options are there. Okay, so obviously knowing that we are moving up, at least according to the trends that we've seen so far, 96.5 cent is a nice good target to have, but this is kind of the optimized model. This is the one that's based on the trends of the bull run. What happens when we actually jump down into our daily view? Well, our daily view obviously has a bit more detail to it. Obviously, we've been analyzing it with cup and handles and things, but we do have here, the high of wave 3, the low of wave 4. This is basically indicating to us, if I can draw an arrow, so that downward trend there, this is indicating to us a more conservative price target. Okay, this actually comes in at 80 cent. Okay, so if we want to basically make sure that we lock in profits, obviously, I'm fully expecting this to go higher than 80 cent. Okay, 96.5 cent is based on the trends. But if we want to basically make sure that we sell on the way up, lock in profits, then we want to be looking at these more conservative targets, right? Because if you're new to the space, the last thing you want to do is basically go into the bear market without necessarily locking in any profits, or at least pulling out your initial investment. It's my opinion. Obviously, I'm not a financial advisor, so it's important that you do your own research. But my opinion is that we want to be selling on the way up, lock the profits in. We can take a look at these Fibonacci areas, right, at 33.4, 51, 69, and 80 cent. These are going to be great areas to basically lock in some profits as we continue the push to the upside. When we get to the top, when we get to that 96 cent area, do expect us to pull back. Now, if you do happen to miss the top of the bull run and we go into a bear market and the price starts to plummet, you don't want to sell on the way down. Nothing moves in straight lines, and there's plenty of ways that you can mitigate against your risk. A good example of this is in our wave 4 here, right? We started to pull back, we bounced up. We pulled back, we bounced up. We pulled back, we bounced up. Okay, we always bounce. Okay, so the last thing you want to do is basically panic sell. You're right the way down here. Oh my god, we're going to zero, and then the price just moves right the way back up. Right, so you fell down. Let's hypothetically say to 7 cents, and then you sell down at 7 cents, only for the price to then push all the way back up to 18 cent. Okay, so it's important that we say this was the top of the bull run here, and you happen to miss that selling opportunity, the price is falling down, don't panic here. Wait for the bounce. You'll bounce up, you'll be able to sell, and then obviously it will fall back down. And again, welcome to the bear market where the money is made and all that kind of good stuff. So I'm not going to go on about that, but basically, we want to make sure that we do sell in on the way up rather than try to panic sell our way down. Okay, that's not for the best. Now, from our current position up to the 80 cent area is 158%, right? So from our current position to 80 cents, that's where we are. Now, obviously, it's less than 3x on this position. Okay, so do be aware of that. Manage those expectations, right? You're not going to go to $100 with Harmony One, for example. Okay, so manage your expectations if you're new to the space. If you're in this for a while, then obviously you kind of know this stuff already. Now, the daily chart has been quite interesting, right? We had a good push up. We completed the cup and handle. We pushed up, in fact, to 38 cent, and we pulled back naturally so. And again, this actually came down to a really nice low area yesterday, and we started to see a good reversal, and now we're actually tracking nicely to the upside. We can see the daily stochastic RSI is oversold, so we are looking to push up, okay, and we are looking for that growth to finally kind of come back in. And again, another good surge to the upside, where I do anticipate us moving up to 51 cent. Okay, that's kind of the area that we're looking for, but there's a little bit of resistance to work through, and we'll go through that in a moment. Okay, so overall, everything's looking very good from a Harmony One perspective. Good traction to the upside, good pullback, and we continue the growth now, or looking to continue the growth to the upside. Okay, and so at this point, we're going to jump over to the advice.io dashboard. Those who are unfamiliar, link in the description down below. advice.io, they use artificial intelligence, machine learning to help us understand the underlying value of cryptocurrencies. This is really important because this data is stuff that you do not normally see from inside the charts themselves, not easily seen anyway. So what we have is a B1 rating overall for Harmony. Okay, so pretty good position just below the A-rated cryptocurrencies. When we come down, we have a fear and greed index that's C1. Basically, this is indicating to us that there's actually a reasonable amount of fear in the market for Harmony One. This is interesting because obviously we've had the pullback, right? So we go from extremely greedy, which is where profits are taken. We go down into the fearful area where retail investors get scared about going to zero, and only to actually see that get reversed. Because when you're down in these lower areas, that's the opportunity, right? And it's more of an opportunity when you have a Sharpe ratio that's an A2 rating, and the Sharpe ratio is your risk reward, right? So the Sharpe ratio here is indicating that the rewards outweigh the risks. And when we couple the fact that the Sharpe ratio is saying exposure is a good idea, and a fear and greed index that's saying there's incredibly a lot of fear in the market right now, we're incredibly fearful, then actually that's the buy the fear signal that you're kind of looking for. Now, I'm not offering financial advice. Chris doesn't offer financial advice. 𝗖𝗢𝗠𝗪, they do not offer financial advice. What they do offer, though, is a platform that gives you the tools to make your own decisions, right? And here, as I read this data, we have a Sharpe ratio that's saying exposure to Harmony One, not a bad idea. And also a fear and greed index where retail investors panicking that the price is plummeting and they want to sell. There's a bit of a market for selling rather than buying, right? So there's an opportunity in that when you marry those two things together. As we come on down a little bit lower, we have the profitability. It's an A1, and obviously that's the best rating you can get, and it's the best rating because it's been a very good performer for the portfolio, outperforming the safer bets of Bitcoin and Ethereum, obviously, and a handful of others as well. We have Harmony One in terms of moving averages, also looking very good. 10, 50, 100-day moving averages, not a problem at all. The 𝗕𝗢𝗪 ratio in A2, so that's your liquidity. No problem with liquidity, as in buying and selling. Harmony One is absolutely fluid, not a problem whatsoever. So there's only one metric here that's completely out of kilter to the others, and that's the sentiment, the fear and greed index. There's an unreasonable amount of fear considering all the other underlying data points are actually looking very, very good. This is indicating that we should start to see it in a bit of a reversal and a bit of a push back to the upside shortly. So when we come back into the charts, we can obviously see a very good green day today and obviously a good push from these lower areas. When we jump down into our hourly view, we actually expand this up again. Just like our daily, we can see that we've pulled this stochastic, the momentum kind of wiping out right now, pulling down to the downside, right, heading to oversold without doing actually too much damage to the price. What we've just been trading between two key areas of 30 cent and 31.7. Okay, so right in here is where we've been trading. Now this is interesting because as we enter this oversold area, coupled up with the fact that we have a really good Sharpe ratio, we're oversold on the daily, we are now starting to think about the next push to the upside, right? That fear has come in because of all of this down here, right? As profits were being taken from experienced traders in the space, right? We set the high, we completed our move, right? So for those who are new, we obviously had the Elliott wave triangle. This then went into the impulsive moves to the upside. That's again what we've been talking about on the weekly chart, but again, obviously on a smaller time frame, still here, waves within waves and all that, right? So we hit good impulsive moves to the upside. Then we started to see the profit get taken out off the table. Panic kind of sets in. People sell at a discounted rate, and now we start to see the reversal, right? We can see the trend shifting now. We can see that here if I actually grab hold of a trend line. Let me just grab hold of my trend. And we can see that we were slipping down. We started to break that trend a little bit. We could obviously reassigned, and we can see this move now has actually completely breached past the trend. So even if I were to go ahead and just move this around a little bit, we can't find two anchor points that are aligned to where we currently are, okay? So this is actually looking pretty good. I can, of course, go ahead and move that up there. Again, completely ignoring all of these additional candles at the bottom. Overall, the trend has now broken, in my opinion, and things are starting to literally heat up quite nicely. What we could be looking for here is, again, another impulsive move to the upside. Wave 1, pull back for wave 2, push for 3, push for 4, and obviously up to 5. So again, we are looking to go ahead and set new all-time highs, in my opinion. And again, this could actually be forming a part of something much bigger. Okay, we could actually be looking at an inverse head and shoulders. If I go ahead and just actually grab the head and shoulder pattern here, we could be looking at something, you know, quite, actually, I'll take it from a different angle. Actually, no, I will take it from there. Okay, so potential head and shoulder pattern. Here's the head coming in. We push back up. We then pull back down, maybe to set this extra area, and then go ahead and complete the right shoulder. And then this would basically take us up to those additional heights, okay? Something that could play out, obviously, as we continue this growth, we'll find out. Obviously, as we come up towards 37 or 38 cent, do expect a pullback. It's quite natural to kind of see that resistance hit up there. But again, right now, we're looking very bullish for a good push to the upside. And obviously, we'll analyze that situation the closer that we get, as to whether or not we end up with a bigger ABC that sees us pull right the way back down there before surging up, and again, then taking out those additional heights. So everything for Harmony One's looking very, very interesting right now, specifically on the smaller time frames, but also now lining up quite nicely into the daily. And of course, the weekly is looking very, very good. It's a bit of a cheat sheet. So if we are ever, you know, confused about what is going on with our hourly or the smaller time frames, we zoom out, we pay attention to what is going on with the weekly. The weeklies are very well structured out, a representation of what's going on in this bull run, where we think things are likely to go, and obviously following that pattern and that structure. Everything is looking very, very tidy right now for Harmony One. Guys, I'm going to leave the video there, but hopefully you have found it useful and informative. If you have, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day. I'll catch you all in the next one.